All customers who had deposits in these banks can rest assured, rest assured they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business. No losses will be, and this is an important point, no losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers.
You go woke, you get bailed out. So the whole Silicon Valley Bank mess is an example of how the government has nationalized banking here in America. Now, we know about the Federal Reserve. We know that they are not part of the government, but they act and have the authority of government. And so even though the president says that no taxpayer funds will help to support and provide the resources and the funds for the depositors at Silicon Valley Bank, that it'll be paid by the insurance that banks pay into the FDIC, we know that eventually that bill will come home to the doorsteps of taxpayers.
Where Yasmin Khorram is outside Silicon Valley Bank, where depositors, Yasmin, are trying to get their money. Is that right?
Yes, they are, Kelly. We have been here since early this morning when the bank opened. What you're seeing behind me is customers of Silicon Valley Bank lined up to make sure that they can get their money. There's about 35 to 40 people out here right now. There's representatives from the FDIC, from the bank, answering questions, reassuring customers that their money is safe. We're seeing, of course, a lot more happier people here today than we saw on Friday. And from the folks that we've been talking to, the founders say that their number one concern over the weekend was making payroll this week. So that announcement from the government is very good for them, and they want to wait and see what happens next. We spoke to one guy at the Santa Clara headquarters who is trying to move his money from Silicon Valley Bank to another. He was lined up from 2 a.m. this morning.
We hope to have the money as close as it can be to somewhere where I feel a lot safer about it, and learn a bit more about exactly what's going on, because things are moving very, very quickly. We feel there are some places where we'd have more certainty over the money and would like it to get there as soon as possible. I think it's going to take a little while before things really get to a point where everyone has clarity on what's going on.
As you saw those people at Silicon Valley Bank trying to get their money out, I'm happy that those depositors that deposited less than $250,000 will get their money out. But if you listen to Shark Tank's own Kevin O'Leary, you hear exactly what's going on with this whole Silicon Valley Bank deal.
Well, I think I know what he's going to say. I don't think he'll say it in the way I'm suggesting, but what effectively happened over the weekend is that he nationalized the American banking system. It's no longer a risk. It's no longer private in any sense. It is now backstopped by the government, ultimately the taxpayer. So it doesn't matter how bad you are as a bank manager, and a good example is what happened in Silicon Valley Bank. That was a combination of a negligent board of directors and idiot management. That's a very powerful cocktail when put together, and it completely wiped out that bank. And that's what should have happened. And we knew before the weekend started that every account with $250,000 or less was insured, and anything beyond that, which is generally business accounts or sophisticated investors, was not. But that's all changed. Now you have no risk in any bank, anytime, and you as the taxpayer bear that going forward.
So you have to understand something. Go woke with these banks, because think about it. If you didn't know, Silicon Valley Bank donated a lot of money to Black Lives Matter. You see all this money that Silicon Valley Bank donated to Black Lives Matter. Let's look at this. Silicon Valley Bank pledged nearly $74 million to Black Lives Matter causes. $74 million. Now, did they pledge $74 million to build up inner cities, to build up communities? All these people in California talking about reparations. I'm sure $74 million could have went towards some of those projects in Oakland, in East LA, in Crenshaw Boulevard, in Sacramento, to those places. But no, they pledged $74 million to leftist causes. $74 million to groups associated with Black Lives Matter. And because of these banks that love ESG, environmental, social, governance deals, these scores, it's important for them to have high scores when it comes to ESG, they don't serve their customers. They no longer serve their customers anymore. After the riots, the George Floyd riots, you see that they join other corporate firms in their commitment to so-called diversity, equity, and inclusion. Look at what they said. Innovation is global and is touching every aspect of our lives, which is creating even more need for inclusiveness of ideas and approaches. We're on a journey committed to increasing diversity, equity, and inclusion in our workplace with our partners and across the innovation economy. See, that's the problem with some of these companies. This is all performative stuff. This is not real stuff. This stuff does not really impact the lives of people that they wanted to impact. This is surface level AstroTurf participation. This is virtue signaling to show that they are quote unquote on board, that they are quote unquote enlightened, if you will, that they support the cause, that they're an ally. But they're not really giving money to where the money is needed. They're not going into the community and giving opportunity zones, providing opportunity zones, providing money for small businesses to develop in the Black community. They're not doing that because they have no desire to do that, because they want to keep the community broke, because keeping the community broke and without resources further emphasizes that America is systemically racist. You have to understand the cycle. The whole cycle begins with, first you got to create the problem, and then you come up with a solution to make the problem even worse, to exacerbate it, and then you blame the system. Therefore, you get people agitated and upset and angry at the quote-unquote system instead of angry at the people who are perpetuating the system. That's the whole plot. That's the whole plan. It's like they're playing chess, and they're using race, they're using these kind of things to manipulate. And these banks like Silicon Valley Bank, they don't have a responsibility to their shareholders or to the people that have deposited money in them. No, their responsibility is to ESG. Their responsibility is to leftist causes, which is why when these banks go woke, they get bailed out. That's exactly why banks like Silicon Valley Bank is located in San Francisco, with a lot of wealthy Democratic lobbyists live. So therefore, you knew they were going to get their money back. Now, some of the larger depositors may be true companies who want to make their payroll, and that's great, but a lot of them are not. And so you have a company like this that is promoting climate activism, social activism, all these activism initiatives that this kind of bank is promoting has led them to make irresponsible and unwise decisions that resulted in them being taken over by the FDIC. You go woke, you get bailed out. Our banking system has been nationalized.